Hi traders, Dale Pinkert here. Very interesting start to the week with Monday coming in and everything but the NASDAQ made a new high. S&Ps, of course, the Dow didn't. And I've been waiting for Russell to complete its mission by taking out the February high, which was accomplished today. This formation you guys have heard me talk about several times. It's a three drive formation pattern. Here's the first one in March, second one last fall, and making new highs sets up a third drive here. Potentially a reversal week. In fact, very negative news on Google. After the close today, it's down about 7%, $70, I believe, a share. And in fact, I showed a Google chart last week talking about the potential for a third drive, and also showed some other FANG stocks. I believe they'll be under pressure this week. But keep in mind, we have the Fed on Wednesday and NFP on Friday. So, fasten your seatbelts. We're going to have some pretty good activity. To me, what I need by Friday to declare a high in the NASDAQ would be closes back under 76.95, which is about 100 lower from here with four trading sessions and central banks and a major economic number on Friday. So do the right thing today and tomorrow will take care of itself. The last contribution I made was US dollar yen. I talked about selling a rally back towards this 1190 level, which is also the 2 week off number. On this weekly chart, I'm giving you some telescopic views here because I think we could be at an inflection point. Paul Tudor Jones says all the big money is made at the turns. Therefore, I have always gravitated towards looking for reversals in the market and being a contrarian. Classic was last week. We got the bullish news about Iran and a bunch of countries not being able to buy oil from Iran after a $24 rally in crude. And by the end of the week, crude really did give up the ghost. Still believe in selling rallies and lower levels ahead in the energy complex. And if you notice, the stock market and the oil market have been married. They've been correlating very tightly, both last fall on the way down and on the recovery since year end and through, of course, this April. Crude may have put in its final top for at least a corrective move. Therefore, S&Ps couldn't be far behind. And if that's a possibility, even though I do believe the yen could be entering a longer term bull market. Here we go. If we close back under this high by the end of the week, I see at least the potential for 109 in the yen coming here. Maybe that uh, dovetails the correction in the S&P. So for now, looking pretty bearish at the end right here. Should create continued move and maybe long side considerations on the TLT. And I wanted to wrap it up with the VIX. So a lot of complacency in the market. Here's your weekly chart. Insurance is cheap. You want to buy insurance when it's cheap, and you hope you don't collect on your insurance. I believe if some of these things I'm talking about and VIX can penetrate 15 here sometime this week, that there could be a pretty good move in VIX. Volatility has been suppressed. Remember, don't just count your pips, count your blessings. Dale Pinkert at Forex Stop Hunter.